Welcome traders to this Elliott Wave exercise. This is the ES, and today I want to share with you one way to trigger the trade and to find the right direction of the markets. It's true that the Elliott Wave Theory is quite subjective. Let's say that you have an impulse. Let's suppose that you find an impulse here, and you are looking for the end of wave 2. This is going to be wave 1, a 5-wave sequence in one direction, and then you're looking for the second wave. Have you been seeing that sometimes the price moves lower? Let's say that you are live here in the live market, and of course here is your invalidation point. So sometimes the market moves down and takes you out. If you have a protective stop loss here, the market moves down and takes out your trade. Some other times it actually works, and of course you want to learn, or you want to find ways of having a higher probability second wave or any corrective wave in the wave theory to have a better trade, to have a high probability trade. So the question, traders, that I want to resolve today is understanding better why these patterns happen and why sometimes they fail and why sometimes they are more successful. So today we have here the S&P after a big sell-off that I'm labeling as an impulse. We have a double zigzag corrective wave here, as you can see. So the point is how we can tell if this is a good idea to sell the second wave, or if the price is likely to move back to the previous high and actually we should start looking for a buy trade. That's the question, right? When you are in the live market, it's hard to tell if the market is coming back here or coming back here. Those are the two main liquidity areas, and of course this could be for any instrument. So we have the liquidity area above the high and we have the liquidity area below the low, and the question is, should I go following the trend and buying, or should I try to sell, right? And of course you can add other tools as the Fibonacci levels, which from my point of view are a little bit subjective, because of course you are going to have a lot of levels here, but yeah, so that's fine. If you want to work with Fibonacci levels, that's fine. But look, the point, traders, is that let's suppose that the price is going up. The price is going up, like is going up here. The thing is that the big guy, that is a set of 10 institutions, central banks, big banks, Goldman Sachs, JP Morgan, that type of banks, huge banks. And the big guy is the one that makes most of the money on the markets, and is the dealer, is the one providing liquidity. So imagine that we can have a way to see the big guy acting before the fact. So let's suppose that we are thinking that this is the second wave, same as here. And let's suppose that we have a way of seeing an additional point of view, which will be the big guy selling before the high. So if we have this type of setup, if we could see the big guy selling while the price is moving up, and we are in the second wave, Elliott Wave second wave, this is going to be a huge advantage, because you know that you need to focus on selling. You know that the only thing you need to do here is selling, because you have the big guy selling. And of course, in order to find if the big guy is selling, you need to have something else that we have. And I'm going to show you that in a second. Because on the other hand, let's suppose an alternative scenario where you are looking for the end of your second wave, or you are looking for selling, but you have the big guy actually buying, and you have the big guy somewhere here. So in that case, you are going to understand that the price is going to continue higher. And you are not going to try to sell your second wave because the big guy is buying. So imagine having the huge advantage of using the big guy direction in your charts. That's great, right? So in this case, traders, let's suppose that while the price is moving up, the big guy is going down, right? So let's suppose that you are in front of this scenario, the price moving up and the big guy moving down. And of course, there you can use your Fibonacci levels. You can use whatever you like to sell it because you have a high probability trade. So here on Elliott Wave Street, we develop the big guy indicator. So let me show you. This is something fantastic. So in this case, we're finding the end of the second wave, right? So far pretty clear. Now, let me show you this indicator that is for TradingView. We have it on TradingView. So look, the price on the S&P, this is a 30-minute chart. We are looking for the end of this leg here. Actually, let me go back a little so you can see this better. Right? So you can see that since this area, the big guy started to sell off. Right? The big guy is selling. The price, the big guy line is a black line. The big guy is selling while the price is moving up. So this is a huge, huge advantage, traders, because now we can focus on selling. So let me show you what we did. We have a Discord channel for members, and we follow these trades on the lower time frames. This is something new that we started to incorporate in Elliott Wave Street. So now you can have the setups and you can have the wave counts. So look at this thing. So here on the 5-minute chart, this was our first entry point. Our indicator also comes with these candles that are going to help you to find the triggers. So actually, blue candle is the trigger candle. Okay. So of course, it needs to, when the price is going up and the big guy is selling off, like in this case, you have to wait for your blue candle. That's it, to sell it. And at the close is where we trade. The blue candle comes with some key characteristics. So in this case, we go to the 1-to-1 risk-reward ratio. Okay, good. The price continue higher. And the big guy keep selling off, right? You can see the black line moving out. Remember that on the wave count, we can't forget the wave count. You are here at this area and we're finding the end of the second wave, right? So coming back to the setup, we look for the next blue candle. So there it is, right? You see the blue candle right there. So we're calling those candles the supply plus candle that you can learn more with us. So the plan was having the sell trade right there, leaving the protective stop loss above the high, of course, right? And okay, the price went sideways. The big guy was still selling, so it was good. The other line was also selling, of course. If you join us, you're going to learn more about these lines. This indicator comes with an extra cost if you want the indicator. But look, here we have the 1-to-1, 1-to-2. Each of these rectangles represent a 1-to-1 risk-reward ratio, like another 1-to-1 risk-reward ratio, right? So here we have the risk. Here is 1-to-1, 1-to-2 so far, right? And this trade was fantastic, traders. Of course, it's not going to happen this type of thing every day, but this trade gave us a chance to capture the whole move. Now, look, the big guy is moving up now, right? This short trade is a 1-to-25 risk-reward ratio. Wow, right? Now, let's go back to the wave count, right? So now we captured the leg down successfully, and we are looking for the end of the wave 3, let's say, either to take profits or to have a buy trade. I don't like to go against the wave 3. I like more to capture the wave 3 and book my profits. So let's go back here to the chart. Now we have to be careful because as we can see, the price is now, the big guy is moving up, as you can see, while the price is moving down. So we have to be careful because now we know that the big guy is doing some sort of accumulation. And after 1-to-25 risk-reward ratio, I'm sure you already booked your profits, right? We have now the light a blue candle that tells that we have to be careful, and that will be the candle to close the trade, right? And the price moves a little bit lower, is doing the accumulation process. We have to get ready, and finally the price the next day actually started to climb. So we got the price moving up, and look, in that, from this candle here, this could be this one or could be this one, right? One or the other. If we went long here, we leave a protective stop loss under the low. Let's suppose that we leave it too tight, so it take us out this low, we trigger again, right? With a better risk-reward ratio. Let's suppose, of course, sometimes we need to have different attempts to trigger the trade. My limit is 3 attempts when I'm finding the end of the trend. And it was possible to capture also the leg up, as you can see. So now it was possible also to capture the leg up. And now that we're in the live market, let's ask the big guy what he's thinking about this setup. And the big guy, in this case, traders, let's go to the 30-minute chart so you can see this better. Here, the big guy is moving down while the price is going up. So we have confirmation that this is a setup, and that the wave count, let's say, is like a high probability wave count. Yes, it's a leading diagonal wave, the one that we are seeing here. It's a high probability setup because we are seeing the price moving down, and we're seeing the big guy moving down in this. Here, the price moving up, the big guy moving down, as you were seeing on the indicator. And of course, this is a beautiful trade. Of course, this trading model comes with a lot of details and a lot of things that you are going to learn with us. We have a whole course about this topic. We also have the Discord channel where I explain and share the setups on the S&P and the Euro. And, it's something fantastic. So traders, let me show you how you can join our group. We are doing some great things in the markets. If you like Elliott Wave, if you like technical analysis, if you like seeing the distribution and accumulation process, and seeing the professional way of triggering and finding your trades, the Elliott Wave Street is for you. Now, so visit the website, go to the membership tab, check the plans that we have for you. We have the Premier, the Elite, and the Mastermind access. So all the plans come with a test drive for just $19 the first month, and then the regular rate. So if it's your first time here, just pick the plan that you like, and you will get access. With the $75 per month, but again, you will get a discount the first month, and you will get access to the Discord channel. So you will see the charts there that I'm posting for day trades and swing trades. And if you want the indicator, it's going to be an extra cost on your trading view. Okay, so it's going to be the membership plus extra cost for the indicator. So that's what we are offering traders, and this is something that is going to boost your trading. Is something that's going to give you a huge edge in your trading. So I'll see you inside the membership. Please have a fantastic start of your trading week. Take care. Bye-bye.